Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm here with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. Hi Manu, how are you this week?
Hey, Paul. Not too bad. How are things with you?
Yeah, really good, thanks. Are we at the bottom is the question. We're going to try and answer that this week. What do you think from a fundamental point of view?
So, look, I think as we discussed kind of earlier this week, if you look at the news feeds on Monday, everything was basically red, and you had good old Peter Schiff coming out saying, "This is not a correction. This is just part of the road to zero," which I always find Peter Schiff hilarious. He's a great reverse indicator, and the fact that he was getting very aggressive and very angry on Twitter was a red flag. And the fact that everyone was talking about 20K, here we go, 20K, here we go. No different to when we got to 68, 69K, and everyone said, cool, we're going to be at 100K in the next week. Well, that didn't quite happen. So I think whenever you get to these phases where clearly the markets are massively overextended, people expect whatever's happened over the course of the last couple of weeks or the last 2 months to continue. And I think, look, it's difficult to say. And obviously, if you look at the response to the Fed on the Wednesday of this week, the rhetoric was rates are going higher. The reality is they're probably not. But the market responded as you'd expect with hawkish talk. Equities got a little bit smashed, so they corrected. So is the low in place is a good question. I think there's a high probability that it probably is. I think that we'll probably need to wait, I think, to see how the market trades over the next couple of days, the next week, to really get confirmation on this. And ideally, I'd like it to gravitate up towards the high 30s and maybe even push back above 40 before I've got some degree of comfort that just below 33 was the low for this. But again, everything that I'm seeing, I'm spending a lot of time speaking to a lot of banks who are looking to get into digital asset trading, and they're not doing this just for fun, just because they think it's cool. They're doing this because they're being told to by their clients. So there's huge demand. And with that huge demand, I think comes a huge amount of price appreciation. So again, I know a lot of people talk about the institutional play into crypto, and they talk about the fact that the institutions are in. I can guarantee you they're not. Probably less than 5% the institutions that want to be in crypto are actually in there today. So again, think about the firepower these guys have. Think about the ammunition they have in terms of changing this market completely with the capital they bring. So I think medium long term, as we've constantly said, I'm super bullish on crypto. I think there's huge upside, and this is an asset that's going to outperform pretty much everything else. I think short term, it does depend on a couple of macro factors. Certainly the saber rattling has died down a little bit with the situation in Ukraine, which is positive. So I think if the geopolitical issues stay just as is, then we probably will see a consolidation phase. If they get better, we'll probably see a bit of a rally higher. But yeah, I think we have to probably wait and see. But my gut feel tells me that the low is probably in place.
Very interesting, very interesting. And any other news that caught your eye this week?
Yes. So last week, if you remember, Russia banned crypto mining.
Yes.
And I kind of thought, having been to Russia last year and spoken to some banks, I don't know whether I believe this. Anyway, so I thought, this is fun. Let's see what happens. Lo and behold, what happens? Yesterday, Putin makes a public statement saying Russia has some huge competitive advantage when it comes to Bitcoin mining.
No way.
And he's asked, yeah, he did. So he's asked the Ministry of Finance to basically look at this and basically make a formal decision. So he's telling them, we're going to do crypto mining and we're going to be more competitive. And now what's hilarious about this is you have a whole bunch of people in the West going, oh my God, what if Putin controls the hash rates? Oh my goodness, we need to mine. So it's quite funny, but yeah, it's interesting. So, but he's right. He's got a huge competitive advantage. And my view on this is I think that Russia is going to embrace crypto in a huge way. And I think, again, like I said last week, some of the comments that we saw were probably just FUD. But if Putin says that there's going to be, Russia's got competitive advantages, he's saying that because they have, and they are going to start doing this in a big way.
As far as Russia's concerned, moving over to Bitcoin as opposed to the US dollar is got to be a way forward, because, of course, they don't want the dollar to be the world's reserve currency. Not necessarily saying. So anything that undermines even slightly that position would kind of make sense.
Well, I mean, I think you've got Joe Biden. I think if anyone undermines the US dollar, it's going to be Joe. Sleepy Joe Biden. Jesus Christ. But yes, so absolutely. I think there's a lot of mileage here in pushing forward and having something like Bitcoin as an alternative to the US dollar, which they can't use anyway. So yeah, I think that's fine. And also, if you look at what they've been doing, the Russians since 2014, obviously since the sanctions started, have been taking all their US dollar assets and selling them down. I think that finished probably 2 weeks ago. And from what I can tell, looking at the capital flows, they look as though they're selling European assets now, which is also interesting / a little worrying. But anyway, what's interesting is that the day that Putin said this was the same day Intel announced that they were essentially going to launch very quickly their own Bitcoin miner. And their Bitcoin miner, I forget the name of the actual platform they've created, but their Bitcoin miner, I think, is 20% more cost effective from an electricity consumption perspective. And last time I looked at this, and I'll be honest, the last time I looked at this, I think Bitcoin was at 45K. At 45K, about 90% of the cost of Bitcoin mining is the cost of electricity.
Right.
It's obviously slightly less where we are today, but it's that order of magnitude. So that's quite a big deal. And it's interesting, Intel have decided that they want to do this. So previously, you had all the ASIC ant miners made in China that were doing this. Now you're having Intel looking at this. So again, I think this is another step towards becoming more mainstream, which is very positive. And the other thing that's quite interesting was we saw a meeting on Monday this week with Nayib Bukele, who's the president of El Salvador, my favorite president in Latin America right now. He met with my favorite dictator, Tayyip Erdogan of Turkey. What the hell were they talking about? I don't know. So obviously Erdogan banned fiat on ramps and off ramps because obviously, when your currency depreciates by 40% over the course of 6 months, people tend to think maybe this currency is not worth very much and dump it for other things. So he stopped that. It's interesting he'd speak to Nayib Bukele. I don't really understand what they're talking about. I suspect he's probably explaining to Turkey that actually if you have a alternative legal tender, such as Bitcoin, you can repay all of your debt to the IMF and the World Bank in Bitcoin, which you can then mine. So look, I don't know the ins and outs of this. It was very hush hush. I saw, I think, maybe 2 or 3 articles about this actual meeting even happening. So again, I have no idea. This is pure speculation. I have no knowledge of this meeting. I'm just hazarding a guess, but I believe that's probably what they were talking about.
Fascinating. So was there anything else you wanted to add, or should we have a look at the charts?
No. I think we should probably have a look at the markets because it was certainly an interesting week so far.
Yes, absolutely. So first of all, the big news is, well, not so big if you've been following this channel, has been the move up in the US dollar, which has actually accelerated. So we were looking at a move a couple of weeks back towards this support, and there was this triangular constriction pattern. Let's just go back one more step, which is normally a bullish pattern. So you'd have a consolidation and then a break up higher really quickly. But what actually happened was the market broke the lower line and we got a correction, which is absolutely fine within the bigger picture of the chart because, we are basing out here. We've been basing out for a long time. And this arrow was drawn at the time to say that the dollar would go up. And if you look at the trend rate, that's very reasonable. 45 degrees is a reasonable angle of trend. So it came back to that. But what was quite maybe caught the market by surprise a little bit was that this bounced off support and it just went up in a straight line. So a really sharp move. Now, we've been looking for a move to this 97.70 area as the main target, which it's approaching. So it's almost close enough for it to be, even if it fails here, a decent hit. That's the 0.618% retracement of this move up here from the move here. But as you quite rightly said at the top of the show, what's been going on is the US dollar has been strengthening. And then you've also got yields going up, which is adding to the pressure on the economy. On top of that, you've got crude oil, which is pushing higher as well. So this is like a 3-pronged attack on the market. and on businesses. We saw this in 2007, 2008. I'm not saying that this is the same magnitude by a long stretch, but we had a situation where inflation was rising, oil was rising, went to $147, and the central banks were just like, well, actually, we've got to raise interest rates and we're going to keep them high. And at the same time, you had all these pressures building up with subprime markets collapsing that they just completely ignored because they weren't looking at those numbers. They were just looking at basic inflation numbers. So the market at some point will flip and it will say these rate hikes aren't going to come in as quickly as expected, or maybe not at all. So yeah, we will get one, but whether we're going to get three is going to be open to debate. So once the market has anticipated the three, it's almost like, well, let's see how things are trading there. Now, especially if the stock markets are going down. Now, we looked at the Nasdaq and how it was making this top, and it has had a very aggressive move. Now, it's not got to 38.2% retracement of this wave, which would be a reasonable short-term correction, and it may end up being just a pullback before the trend continues. But it's still something that the market is going to be paying a lot of attention to. Now, just very quickly, what's been going on in the gold market? So we talked about geopolitical tensions. You'd expect gold and silver to be rallying really aggressively if they thought that there was going to be a war. And none of that's happened. We've got gold, which I'll just flick back to here. Fantastic resistance line has just been holding for such a long time. And at some point, this will break out. And when it does, we're going to see a massive move over $2,000 and beyond. But we're waiting patiently, and I know people are sitting with long gold positions wondering whether they're worth it. And potentially, once they've given up, that's when the market will move. And I can't say exactly when it will be, but I do think this year we will see a very strong move up in gold and in silver. And it may be when the dollar's actually reversing its trend, which is not quite here yet. So those pieces of the puzzle need to come into focus before I think that will reverse. But, silver, massive support here at 21.42. If it breaks that, I think that will shake out a few positions. But I'm really interested in silver because I think it's underperformed. So if we do get a correction, perhaps even to this sort of 19.5, 19.6 area, I think that'd be really worth, taking a look at. And so on to the cryptocurrencies. If we take a long-term view of this, if we take a big step back and say, well, look, where exactly are we in this big picture trend? Well, the trend is still to the upside. I've drawn this red support line or trend line, and that goes to show where we are now. Now, it could be, I'll just move this out of the way. It could be that the market does retrace a bit further and comes back to this trend line. But the main question is this a topping pattern? And my experience of when the market tops out like this, you usually have really bullish news, which is completely counter to what we're seeing in the technicals. I'll give you an example. When we saw this in the gold market, the market was going sideways, and it went sideways for like 18 months. But everyone was so bullish. They were talking about how gold was going to go up and how the Fed were creating inflation. This was around 2011. And the chart just did not confirm it. It was just showing that there was all this bullish news and the market was going sideways. Now, of course, it's absolutely possible that this could go down, and nobody knows anything absolutely. We're just looking at probabilities. But in terms of the psychological structure, it doesn't support it at this point to say that we're in a major top. Now, we do not want this support level here. We do not want this support level at 28,574 to break, because if it does, I'll just put that line back in there. It seemed to have just dropped out. So 28,574 is massive support. Well, this is where the first major correction came in here, and then it bounced off to this rally. So if that completes, there are problems, and I don't think we're there yet. We have had an almost 53-54% drop from the high, so around 50%. If something's half price, that's going to encourage some buying, and Fibonacci support as well as like this trend line support. So there's a few things that pointed to a rebound. What we would be looking for, what we're expecting at the end of the move is capitulation. And what we mean by that is the market drops really aggressively, there's this panic, and then up it goes again. What I also like to see is another attempt on that. So, we might see this in the next few days where the market goes down again, and then people panic again and go, okay, here we go, it's going to collapse. They start selling short, looking for a move to 20,000, as you were saying, Manu. And then it just turns around, rallies, and then goes back up and takes out a decent resistance point. Now, the market, as you know, we've been saying it every week, you've got to approach it really cautiously because we are below major support levels. 54,000 was the crossover point. We haven't even broken any sort of resistance lines that would normally indicate that the market is going up. So we are just trying to pitch in a low and see whether it holds. But we do need confirmation, and that confirmation would come in with a break of this resistance line, a break of the 42,000, which acted as support on the way down and will now be resistance. That would be really good. If we can take those levels out, fantastic. We can start talking about 54,000, and it would put this potential move to 28,000 and a break to bed. So what we want is, we don't want this to turn into a big M shape. We need this to break up to negate this M shape. So it's kind of important that the market holds up in the next few weeks. And if it doesn't, we're going to have to revise. But for the moment, I think there's enough evidence, and I'm pleased that you agree that there's enough evidence to say we could be looking at a low here. And so just to cautiously approach the potential for a rebound, at least don't get caught short the market, which if it does rally, it could be quite aggressive. Now, again, as we've said every week, when the market breaks these prior support points, it goes into an air pocket. So like anything, trading is not an absolute, an analysis is not an absolute method. You're looking at if then. So if the market does this, then we do this. If it breaks this, then we look at this. We let the market tell us what to do. And when you're at these important lows, it can be quite tricky. So nobody's saying that any of this is easy or straightforward, but we have to gather all the evidence and say, well, how does it look in terms of the big picture? And it does look as though we are seeing some key support coming in. If we look at Matic, which we were talking about last week, and we got the question about whether there was a head and shoulders pattern, I did say even though there wasn't a head and shoulders pattern, it didn't mean the market wouldn't go down. So if we switch back over to a weekly chart, you can see that the structure of this is still one of potentially an ascending market. This doesn't look like a big double top pattern. Now, it could end up being, but it's not really how the pattern looks. Certainly not in my experience. It looks like it's hit a high, retraced, it's worked its way to the high again. It's going to come back, find support, then go sideways again and delay the breakout, but eventually we will see a break into a new high. That's my reading of the chart here, and I'm willing to obviously change that if things go wrong. But the 200-day moving average, the 60-day moving average, both of those are still rising. And it has ended up being one of the most, defensive markets. At least it's held up pretty well considering the way the rest of the market has traded. So if you're looking at Elliott wave theory, we've had a 1, 2, 3 correction. What we don't want to see is a 5 correction. So 1, 2, 3, if it goes 4, 5, then it means that we're going to see a much bigger correction. So as long as it holds in here, which is why I've drawn this line in, we could tentatively say that this is a good low point, and we should at least see a rally, and maybe the market goes sideways. So just finally, a quick look at Ethereum. When it comes to a normal structure for a double top, so you could probably see this looks I know there's a lot of lines on here, but there's quite a lot of analysis being done. But a structure for a double top here doesn't really fit in. In other words, this would be 1 and this would be 2. And what I like to look for is similarity or symmetry between the tops. And we don't really have that. We have it's kind of skewed to one side. So we've got, this is a really high and fast top, and this is sort of long and drawn out, which is unusual. If it does end up being a top, it would be a very unusual type. If this were to happen, or if it were to turn into a major top, then it would almost make more sense that it goes down, rebounds, makes a third top, and then goes down from a kind of what I regard as kind of symmetry, which tends to work pretty well when looking at the perspective for a top. So if it's not really a top, then it could most likely be or move towards being a corrective phase. And again, very similar to Bitcoin, we need this leg to break up. You know, we need it to break this yellow line, which would then confirm that this is not a big double top. It would break the pattern of it, and it would make it look more like a bigger consolidation phase. This whole phase would be a consolidation phase, and then the breakout from that would kick off the next major rally. So the prospects for a big move once this correction is over it is pretty exciting. But unfortunately, obviously, it's quite obvious that, you know, sentiment is negative, and it would be after a 50% decline. And so once again, we do need the dollar to start to weaken, and I think that will come from interest rates. So we'll be looking at the 10-year yield and see how it trades close to this 1.9495 area, close to 2, see if it can get up there. But the first sign of weakness there will tell us potentially that the dollar's going to weaken, and then that will move into the prospects for gold and for Bitcoin and for everything else. So it's going to be an exciting year, I think, one way or another. I think there's going to be a lot of volatility and a lot of opportunity. But at the moment, it feels very much like a January market. So back to you, Manu. Any final thoughts before we close off?
Yeah, just on your comment on silver. Look, silver is probably one of my favorite assets right now. I think it's incredible, and I think it has a very, very bright future. Right now, given where the price action is, it seems incredibly cheap. And I can see this probably doing something like a 5 or 10x in the next couple of years. I think gold is probably going to do well, but I can't really see it doing more than a 2x, if I'm being honest. Obviously, crypto is going to do a lot more, but of the conventional assets, you know, I'm super, super positive on both those. And then obviously by association, obviously gold and silver miners, which give you a leverage exposure to the underlying asset. Again, I'm super, super bullish on those two.
Yeah, absolutely. I'm waiting to buy some silver. I don't have any. I've never bought silver before, but I think it could be an interesting thing to pick up on the next correction. I'm also wary that I might be trying to finesse this too much, and so I've kind of been patiently waiting, and I might miss the low. So that's quite possible, and I wouldn't mind that if I'm joining a trend that's moving higher.
Yeah, absolutely.
Fantastic. Well, thanks so much for watching, and we'll catch you next week.